Namaskar, this is Akhilesh Bhargava again. Welcome to yet another episode on Business and Finance exclusive with me, only on HW News. India continues to be in a banking crisis. We have already lost 10 lakh crores to bad bank loans, and the figure continues to mount. It is because of this kind of a loss in the banking system that even the economy is suffering, and there has been a perceptible increase in inequality of income in India. In their jargon, banks call these as NPAs, these bad loans, non-performing assets. To us, in reality, these are stories or cases of frauds and criminal negligence and misconduct by bankers in cahoots and together with the borrower and various other agencies who are involved in this saga of crime, corruption, and fraudulent misconduct. We have always maintained that if the bankers had exercised their basic due diligence, care, and caution, most of these fraudulent loans would not have taken place in the first place. If the bankers were vigilant, if the bankers were aware that they are watchdogs of public money which is being lent to borrowers, there would have been far better caution. There would have been professional skepticism, as we call it, of the bankers to keep a check on the borrowers and not participate in this game of deceit. Take a case like Alok Industries Limited. Bankers frivolously and carelessly gave it loans up to 31,000 crores. What is it against that at the moment with the bankers? Assets worth just 4,700 crores. Where did this huge amount of money go? Why was this money given in the first place? Why was the end use of the money not even monitored by the bankers who were very carelessly giving away this money? They were just doling it out. At the moment, just basic investigation shows that stocks and book debts to the tune of 11,000 to 12,000 crores are missing. That money is not there with Alok Industries. As I said, the only assets are worth 4,700 crores against loans of 31,000 crores. This is the kind of fraud that has been perpetrated in the banking system. Bankers were at the center of this game. The Central Vigilance Commission, headed by one of its commissioners, Mr. T.M. Bhasin, who is himself a former banker, has recently come out with a post-mortem analysis of 100 top bank frauds in India. It's a bit belated because this kind of an analysis should actually have been done by bankers on a real-time forensic basis. Nevertheless, we have a CVC report of 100 top banking frauds that took place. This report is a sector-wise analysis which gets into the modus operandi of the frauds that took place or the bad loans that were given in a criminal manner. It also talks about the system lapses and failures. This report has analyzed frauds in the sectors of pharmacy, pharmaceuticals, steel products, metals, exports, trading, aviation, IT sector, and even frauds against fixed deposits. And this report confirms what we always say. These banking frauds could have been avoided to a large scale. We are not referring to those kind of loans which went bad because of genuine banking decisions. That kind of element of risk is always there in banking. But we are talking about instances, those big loans which were given in collusion with the borrower and the various agencies that were involved. Let's look at some of the sector-wise analysis that the CVC report has done. And it will confirm what we have been saying. The bankers and the borrowers and their agents were involved in it together, perpetrating this entire loss on India of over 10 lakh crores, and we are counting. Let's talk about frauds in the export business finance frauds. These frauds were noticed by the CBC in various formats. The first was in respect of loans taken for exports. The borrowers claiming that they have exported the goods, but no exports took place. It was found that bogus export bills certified by chartered accountants were given to the bankers and the loans were taken. The money was never used for the purpose. The money was never returned. The exports were bogus. The export documents were bogus. The audited financial statements certifying these exports were bogus. And the money was siphoned away. A number of such instances were noticed, and they could have been plugged by the bankers had they just gone to the customs department and verified whether these exports claimed by the borrowers are genuine. They never took the effort to do that. In yet another instance in export-related frauds, against the same export bills, multiple loans were taken from various other bankers. So, one export document, maybe it was genuine, but maybe 5 bankers gave loans against it. And interestingly, the chartered accountants never reported these additional loans taken in the financial statements of the borrowers. Giant frauds, money siphoned away, banks duped in a fraudulent manner. The second let's talk about is fixed deposits fraud. And this is a very interesting case that the CVC reports. A gentleman paraded himself as an agent of a large government institution. That government institution gave bulk deposits of 604 crores to the bank concerned. So to the PSU, the person appeared like a bank agent. To the bank, he appeared as an agent of the PSU, and 600 and odd crores of bulk deposits were given to the bank. The fraud started thereafter. The individual concerned filed an application with the bank saying that the PSU wanted loans against these particular fixed deposits. He had never given the original fixed deposit receipts to the PSU. The PSU was not even aware of it. And the bank, without asking questions, gave a loan against it. That loan against the fixed deposits was never asked by the PSU. The person concerned just siphoned away the money. Fixed deposits of a PSU misused. Bankers took no due diligence steps. The CVC report mentions that the bank didn't even bother to check whether the PSU had even asked for this particular loan against FDRs. The money just went down the drain. Yet another case of fraud of demand loans taken against the FDs of a development authority. This was a staff fraud. A bank staff member was aware that there was a fixed deposit of over 250 crores of a government development authority. That FDR was pledged with the bank. The development authority was not even aware of it, and the money was siphoned away into bogus savings and current accounts. 252 crores lost by way of a bogus loan taken against the genuine FDR belonging to a development authority of the government of India. Yet another fraud reported by the CVC has to do with bogus LCs. A staff member without any authority opened bogus LCs for imports. Those LCs were honored by the branches of those banks abroad. In other words, an LC was given, it was completely unauthorized, like what happened in the case of Nirav Modi. That LC was also confirmed by the staff member on the SWIFT messages. It was a completely fraudulent document that was created. The money was siphoned away because the overseas branch of the bank honored those LCs and gave money against it. The money never came back. The next sector that the CVC has analyzed is the IT sector. Frauds took place in the IT sector against export receivables which were bogus. The book debt statements given of the export receivables were again bogus. They were wrongly certified by the chartered accountants, and the money was diverted away. It was taken away through group companies, which the bank even didn't bother to check whether they are group companies or they are independent entities. Again, a case of collusion by the banker and the borrower, because the chartered accountant colluded in giving bogus export certificates, bogus certificates of receivables, which the banker never bothered to check. These kind of frauds also took place in the trading sector. The trading sector frauds were even more extensive. Companies claimed that they had sold goods. Companies claimed that they had purchased goods. Companies claimed that there was stock on hand. The bank gave loans against the stock on hand. Nothing had taken place. Neither the sales, nor the purchase, nor the stock on hand. The bank did not even bother to verify this reality. Bogus documents were given, fake documents were given. The bank accepted it because they were certified by the chartered accountants. To a certain extent, the bank has a right to rely on statements of chartered accountants, but they should have been suspicious of these transactions because the CVC reports that there was a sudden buildup of this kind of a turnover. Money was taken away it was diverted, and there was neither a stock, nor a sale, nor a purchase, all certified by chartered accountants and the borrower himself. These funds were thereafter even diverted for gambling, for breeding of race horses, for breeding of bulls. What a cock and bull story. All against bogus financial statements, bogus documents submitted by the borrower concerned, and the bank did not check it. The CVC reports yet another instance of discounting of fake checks and LCs, which was perpetrated by a chartered accountant. The CVC calls it a mind-boggling fraud. In this, the chartered accountant concerned ensured that bankers sanctioned loans against house properties which either were not there or whose title was such that a loan could not have been given. The banker did no KYC. The bank did not even bother to check whether the title of the property was correct or not. In some instances, it says that the house property was not even there. This fraud was extended by the chartered accountant even further. Loans were given against life insurance policies which were completely bogus and fake. The bankers could have checked this fact with the LIC. The bankers did not check it. The bankers just went ahead giving loans against these kind of securities which could have been found out. Their reality could have been found out just by confirmation with the LIC or confirmation of the title through an advocate. No such process was initiated by the banker, and the chartered accountant perpetrated a huge fraud. The services sector was yet another sector that the CVC studied and investigated and found frauds. They mentioned a case where a company was given loans for the purchase of 2,804 trucks. The trucks were never purchased. Because the trucks were not purchased, they were never hypothecated in favor of the bank. The money was just siphoned away. The money was taken away by the promoters. And interestingly, in all these cases, what has been noticed is that the promoter, apart from siphoning away the money, used the same money to show to the bank that he has gotten his promoter margin. Because in every loan given, a promoter is required to bring in his own margin money. The margin money was never brought in by the promoters, and sadly, it was certified as the promoter's capital contribution by the chartered accountants who were the statutory auditors of these kind of companies, of these kind of scammy promoters. The bankers never bothered to check it. The aviation sector is famous for a fraud big thanks to Vijay Mallya. The loan given to Vijay Mallya has always been a question mark to us. The loan was given against security by way of a brand. A brand is not worthy of being called a security, and that too against a disputed value. The CVC also noticed that the financial statements given by Kingfisher Airlines for the purpose of sanction of this loan were fake, not genuine. The figures were doctored, and obviously they were certified by the statutory auditors of Kingfisher. Kingfisher did another way or adopted another route to siphon away bank loans. It paid lease rentals for aircrafts which were never really paid, and that money went abroad. It came back obviously into the pocket of Vijay Mallya. The aviation fraud has become the poster boy of all the NPAs in the country today. This is the way in which CVC has analyzed frauds. And the frauds could not have taken place. We are repeating, it could not have taken place if the bankers, the borrowers, the chartered accountants, the advocates, the valuers were not into it together. And the CVC finds that they were into it together. One of the prominent roles that came into this entire saga of fraud and criminal misfeasance, criminal negligence, criminal misuse of funds has been that of chartered accountants. They have audited or they have given statements, they have signed financial statements, balance sheets and profit and loss accounts which were bogus. In most of the case, these bogus financial statements showed capital that was non-existent. It showed promoters' margin in the business that was non-existent. They certified turnover, profits, net worth, growth of the company, which never took place. These statements were consciously signed by these statutory auditors, knowing that what they are certifying is wrong. The bankers happily relied on it. The bankers never bothered to check whether the statements showed an unbelievable growth in the company's business, which should have been investigated. They never bothered to go beyond these audited certified statements of the chartered accountants because They were into it together. They wanted to rely on it, and they did. But this role of the chartered accountants, of the statutory auditors, was a very, very important item in this entire scam conducted. We have lost 10 lakh crores in the process. The chartered accountants also gave bogus certificates in terms of stock on hand, in terms of security, in terms of promoters' capital, in terms of exports. It is they who certified these kind of transactions, these kind of documents, these kind of securities, which had never actually taken place, or they were highly overvalued. It helped the bankers to justify the loans. It helped the bankers to enhance the loans, like what we have seen in the case of Alok Industries. Receivables of 12,000 crores missing. How did the chartered accountants certify it? Banks merrily gave loans against it. Yet another bunch of consultants who have played a dubious role and who were colluding in this entire story were advocates and valuers. Advocates gave title certificates of securities which were questionable, or they were given regarding those securities which are non-existent, particularly when it came to immovable properties. Valuers valued these assets of securities which are non-existent, or they overvalued. So it could be a house property worth maybe 1 crore, the valuer valued it at maybe 5 crores and the bank gave loan against it. They also played a key collateral role in this entire saga. The rating agencies also have come under fire in the CVC report. The reports given by the rating agencies, the ratings given by them were completely suspect in a number of occasions. Maybe even they very willingly relied upon the bogus financial statements given by the chartered accountants. But the net result was it helped the bankers to show a rosy position of the borrower and to justify the loans given, irrespective of the actual state of affairs. Where did the bankers go wrong? What were their lapses? The first place that they went wrong was they willingly did not exercise care, caution and diligence. They could have found out the truth if they were just a bit vigilant. They could have found out diversion of funds, siphoning of funds, if they were just a bit vigilant. It is noticed that very often the funds were siphoned away into real estate, into the stock market, or into completely unrelated activities for which the funds were given. The bankers never kept any kind of a vigilance to detect this. The bankers never bothered to even check that the transactions that are taking place are with related parties. They are not genuine transactions. And when there are lots of transactions that are taking place with related parties, like the CVC reports in the case of the diamond industry, the CVC reports that a lot of frauds have taken place in the diamond industry only because of transactions with related parties which were bogus. The diamond industry, in fact, is ridden with bogus transactions with related parties which were never meant to be genuine, and the bankers just slept over them. It was a case of carelessness, it was a case of corruption, it was a case of deliberate negligence. Why else will a banker give a loan and not even execute proper security documentation with the borrower? It was a conscious activity, and net result 10 lakh crores lost by India, and we are counting. We think that all these agencies involved, all the persons involved, whether the bankers, the borrowers, the chartered accountants, the advocates, the valuers, they need to be punished for this crime. It's been a serious national crime, and the punishment needs to be commensurate with the size of the crime. India has lost 10 lakh crores by now. The banking crisis remains unresolved. We are struggling to resolve it. It has already impacted the growth of the economy. And this kind of a crime deserves the most severest of punishment. Otherwise, it will recur again down the line. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, subscribe to our YouTube channel.